Dhanlaxmi Bank, which reported an operationally strong quarter. Net profits rose over 80%, while the asset quality too saw an improvement. Let's discuss this in greater detail with T Latha. She is the MD and CEO at the bank. Ma'am, thanks very much for joining in. Let's put the quarter gone by into perspective. It looks like a good quarter, both operationally as well as with regards to the asset quality.
Yes, madam. Both operationally as well as asset quality, there has been a substantial improvement quarter on quarter and year on year also.
You know, the last time we spoke, ma'am, you'd said that you are targeting a loan growth of anywhere between 10 to 12%. Are we on track with that?
Yeah, very much on track. We have already done about 8% year on year over September 18. And the next 2 quarters will definitely be good enough for us to definitely reach the target of 10 to 12%, which we have committed.
Ma'am, the loan growth for the quarter gone by is about 7.2% on year-on-year basis. Of course, sequentially also there's been some bit of improvement there. But could you give us a guidance? What sort of loan growth are you looking at with regard to the second half?
I can definitely tell you our basic loan growth, if you see this time also, has been more into the gold loans, more into the microfinance and the retail products, including the agri-gold loans and the agriculture loans. We have a healthy portfolio in our priority sector also of about 45%. And even in the agriculture, against the RBI regulation of 18%, we have about 22% as a growth.
Okay, and
we are comfortable in all the parameters, even stipulated by the Reserve Bank of India.
Word on provisions, which have gone up even on sequential basis in the second half. What sort of provisioning can one watch out for?
Provision, madam, it's a provision coverage we have increasing. So we have increased our provision coverage up to 90% now. And that means we have a very, very healthy provision coverage. And if you see, our gross NPAs have come down to 7.06. We are factoring in to bring it to below 6.5 by March 2020. And our net NPA, which is at 1.05% today, should come down to less than 1%, which means our provision coverage ratio, we are targeting to increase it about 93 to 95% by March 2020. There will be a good growth in advance as well as a good growth in recovery of our advances, so that both our advanced portfolio improves as well as our asset quality simultaneously improves in line with it.
Yeah, Ms. Latha, congratulations on a good set of numbers. That was, well, you kind of preempted my question. If SBI and some of the other banks are saying that they are going to see substantial recoveries in Q3 and Q4, are we to assume that for you as well, whatever little pain points might be there, we might see a better recovery percentage as compared to what we've seen in the past?
Definitely. I think the next 2 quarters will also be a very good recovery portfolio for us. We have already targeted a few accounts, and that's why I said even our gross NPA should substantially come down from 7.06% to less than 6.5, and even our net NPA should come down, and we are definitely targeting at least another 50 crores of fresh recovery, that means we'll be really covering up nearly 100 crores of total recovery during this financial year, which is what we had targeted at the beginning of the year also.
So in light of that, and maybe you briefly alluded to it, but pardon my not maybe paying heed to it, but what is the year-end target for the loan growth numbers? And would you reckon that with the recoveries that we're talking about and the improving situation, that the loan growth number as a percentage could look much better in FY21 over the current year?
Yeah, definitely. FY21 should be much better because, see, we were stagnant for quite some time, and now that our loan book has also started improving, we are having a lot of people inquiring about their loans, and we have also started a new retail product. Not a product, I would say. We have started a retail center wherein we have posted a new retail head who will be taking care of the entire retail for our entire Kerala. This we are expecting us to give a very good boost to our retail assets. And simultaneously, he will also be taking care of all the retail recoveries. I think going within 6 months' time and financial year 21-22 definitely will give us a much greater credit portfolio. Our advanced portfolio should increase, and also the recovery should happen so that our asset quality remains very strong for us.